GM, and maybe a little bit less of a happy GM today. It's been a crazy week, maybe one of the craziest ones in crypto that I've experienced, Matt. So this is the weekly crypto recap, and we're only talking about one thing, and that's FTX, the collapse, and what happens next in crypto. So Matt, thanks for coming on today. I feel like you've been around, you've seen tons of crypto cycles, you've seen companies boom and bust, but this one feels different. So let's just start off from the top, like what happened really, really briefly. FTX, it looks like they're completely bankrupt. Binance has come in, looked at some financials, backed out of the deal. So from your perspective, Matt, like what happened here? And why did we end up in this situation with just FTX going from what seemed to be crypto's darling child to bankrupt in 48 hours?
Well, we won't know what happened for 7 more weeks on exactly what they did behind the scenes, but we do know they don't have the money. And if they had the money, they probably would have been able to plug the hole, but they weren't. And this is super bad. And this is a Lehman moment for crypto. And Lehman was the company that eventually went bankrupt back in 2008 that led to that financial crisis. And what's interesting is we had bankruptcies earlier this year in the crypto space, like Voyager going under and Terra Luna. And then it took like another 6 months for this to kind of metastasize behind the scenes is what it looks like. And now FTX blew up and they're bigger. And if you look at 2008, the exact same thing happened in the traditional finance market. You had Bear Stearns have a lot of problems and a lot of other smaller lenders have some issues. And then all of a sudden, 6 months later, Lehman blew up. And so this is the type of thing that happens in finance because everyone is max leveraging everything they possibly can to get that incremental return on finance. And so it's super bad. This is going to add 6 months to the bear market for crypto. So whatever you thought the bear market was going to end, I just personally would say, I think you need to add 6 months to that. And there's going to be a lot less speculation short term. There's a lot less money. The FTX is a major market maker. There's going to be a lot less liquidity on every single exchange, and liquidity is oxygen for markets. And so I expect prices to grind lower and continue to move that way because of this event. So there's a lot of people that are wiped out too that I don't think that people fully understand yet. There's a lot of VC funds, and people have maybe seen the Sequoia letter talking about how they mark their books to zero. But beyond that, there's $5 to $10 billion of deposits that exist on FTX, and a lot of these venture capital firms kept some of their money on there. Multicoin Capital was out there saying that they had about 10 to 15% of their AUM sitting on FTX exchange that they now can't withdraw. I know other funds that have similar issues. It seems to be about that. There are a few funds that had 100% on there, and they're fully wiped, some of the smaller ones. And there are startups that held their money on FTX, trying to just get a little bit of extra yield on their capital that are now in trouble. And there are, I think there's going to be very limited fundraising in 2023 because the crypto industry itself has just lost $5 to $10 billion of capital. So the industry is going to be super impacted for the next 12 months for sure. So that's my in a nutshell. And I don't think that we've seen the end. I think it's always very dangerous to claim that you're at the end of something in a bear market. I really think it's better to wait and see and be very, very cautious and see what happens. And it's going to be several weeks just for the major components to come out here.
Totally. I mean, I felt sad thinking about a lot of the individuals that just lost money through this because the scale of that is just kind of hard to comprehend, and how many people lost savings, just investment money, whatever it may be. But then when you start thinking about the companies, I mean, that adds on an additional scale, and it kind of just trickles down, right? Like people's jobs being affected, innovation slowing down that we're really hopeful for, maybe not happening, or companies not able to see through on their mission. So, now that we've seen this, what do you think happens next for both like the industry at large, and then also is there anything that you think happens next for individuals that are trading, speculating, just participating in Web3?
Well, I think so. This was concentrated on the exchanges. So, we had Voyager earlier and FTX, and I believe those are connected. We're going to find that out, but we'll see, right? But I will say that I think centralized exchanges are here to stay. I think we're going to have companies like Binance and Coinbase. But now the new things we're seeing is like CZ is coming out with proof of reserves. And this is going to be one of those things that it's much more important. And we already had stablecoin issuers doing proof of reserves, like Jeremy Allaire at Circle for USDC. And so this proof of reserves thing is going to be much more important. And this is something that people in the blockchain industry have been talking about forever, which is we need to get all of these different counterparty agreements on chain as quickly as possible. And we're not there yet because it's too hard, right? And there's too many of these little things that are happening for maybe they have reverse repo or different kind of market making agreements or whatever. But honestly, we're ready as an industry. Like the next couple of years, we can actually work on this and get all of this on chain. Imagine, for instance, if FTX had proof of reserves. And then when Luna blew up earlier this year, and it looks like they may have taken a hit from that, or whatever the problem was, you would have been able to see it, right? Much, much sooner. And so they wouldn't have been able to dig themselves a $10 billion hole because everyone would have noticed when they had a $1 billion hole or maybe a $100 million hole much earlier in this process. And that's, one of the very interesting things about crypto is if you commit to having all those types of agreements on chain, then people can see the bad information, very early in the process. And that's what we should have done here. And I'm happy to see CZ pushing on that. Warning on more regulation. So whenever you have this many consumers impacted, regulators are going to come here and they're going to prosecute. They have to, right? It's their political mandate. So I hope that regulators wake up and realize that they need to provide guidance sooner. Imagine if regulators had, leaned into crypto 5 years ago, so that by the time we got to 2020, everyone was already publishing proof of reserves as an industry standard. 2 years ago, we wouldn't have these problems, and we can do that, right? And there just needs to be a lot of conversations there around how to make this better. And I think that one of the big problems that we're going to see is that when you don't have guidance, people are always going to move to the edges where they can just maximize returns. And FTX was based in the Bahamas, like for the majority of FTX, and their regulatory light regime. And people just if you do that, what that means is you have a competitive disadvantage for people who are playing by the rules. And so that means they get crowded out. So what you end up with is the biggest, most successful crypto exchanges are going to be the ones that take the absolute most risk in the short term until they blow up. And, we saw incredible growth at FTX, and it looks like that's the playbook they took. I don't have all the information, but I would say that, that's a rule. That's like something everyone can learn from this. I think there is more regulation coming. I hope regulators realize that they are partially at fault for this. And if we're not blaming them, then I think we're missing an opportunity to really point out how they need to lean into the industry to pay better attention. And if we had any kind of framework whatsoever for crypto reserves, we could have potentially avoided a lot of these problems that we've seen now.
Yeah, it's interesting. Like, not only could the proof of reserves give people who are putting money on the exchange confidence, but it seems like it could even helped like Sam SBF himself, because he put out a tweet like 4 hours ago and he was listing kind of some of his series of mistakes. And one of the things he cited was just in poor internal labeling of bank related accounts, and so he was kind of saying his internal finances he wasn't even reading right. And I don't know, that's one of the worst excuses I've seen, but
I'd ignore everything. Yeah, I'd ignore everything coming off of his Twitter. What he needed was needed somebody to hold him to be more accountable. And the way that we can hold counterparties accountable is by forcing them to push their stats on chain. And imagine if market makers or people who are working closely with FTX, some of the stablecoin providers, for instance, or whoever else is providing liquidity on a short-term basis, some of the trading desks, the OTC desk, etc. Imagine if they had said, like, we need you to say that you have 100% of this marked somewhere, right, on chain. And then all of a sudden they would start seeing, hey, what's this invoice? Why are you transferring this out to your trading company, Alameda? Like, that's not okay. Let's talk about this. Let's get this, let's figure this out sooner. And again, the biggest problem here is it looks like they doubled down on a problem using their own token. We'll see if this comes out, but it's like we have a hole. Oh, we can patch it over with our FTT token. Oh, we just need a little bit more. Oh, we just need a little bit more. Oh, wow, whoops! Now it went. We just 20x magnified the problem, and I feel. Yeah. Anyway, we'll see where this comes out, but it's going to be a great book, right? And I'm very excited about seeing the movie come out in a couple of years on this as well.
Yeah, it's it gives me a whole new sense of respect for Coinbase, even Unstoppable, and I mean we've talked about it on the pod and very publicly before on the work we're doing to make sure we're following regulations, thinking about regulation first, and making decisions now instead of skirting to the edges like you kind of described. So I think that just gives me confidence and definitely some of the major players that are still here.
And you see it from CZ at Binance too. I think he did a great thing stepping forward. And like we say on Unstoppable Domains, if the industry does not regulate itself, right? So I know there's a lot of negative connotations around the regulators, and they're right, because if you look at it, I think that they have not done a very good job at all. And like I said earlier, I think they're partially responsible for this by not doing the work of learning how to work with this space. But on the industry side, we need to do our job too. And so like when CZ comes out and says, hey, we're going to do proof of reserves and we're going to put this out there, that's a great first step. I hope they move that more towards an industry standard. I hope other exchanges adopt it. Like it'd be great if Wobi and Coinbase and Gemini and everyone's like, hey, we're all going to start publishing industry reserves as here's the standard we're going to work towards as an industry group to get this out there. I think that would be a great development here. And you see us doing similar things on the policy side of Unstoppable Domains. We're like, we need to, as an industry, come together and be like, here's what we think about naming, and here's how they should be interoperable, why we think that's important, blah, blah, here's how we can protect people. Industry has responsibility. Regulators have some responsibility. Let's not point fingers at each other. But we're all currently right now, I think that everyone's a little bit guilty for this thing happening.
Totally. Well, maybe my last question for this Friday recap is if people are about to be sitting at home at their Thanksgiving tables talking with their family, this stuff is on Twitter. I don't even know. It's about to hit all the mainstream news. Everyone's gonna be talking about it. What do you say at Thanksgiving when your family says, well, a year ago you were telling us to buy some NFTs, to buy some Ethereum. Look at all this. Look at all this craziness now.
Well, first of all, I've tried to be very careful with not telling my family what to do with their money. So I would say that's the number one piece of advice I can give to you. If you want people to learn about crypto, that's always a good thing, because I do think it's going to be in their life every day. But be very careful, because people do get upset about their money. Easy money policy is gone. So when your family talks about, crypto is doing so terrible, just be like, well, the ARK Innovation Fund is down 70% the last year, right? So, and all of these different tech stocks, especially the unprofitable tech index, down 70, 80, 90%. And then, the markets themselves are down 20, 30, or 40, depending on what day of the week it is that you take a look at it. So there's just less easy money in 2023. We have this high inflation problem. Where the Fed is taking money out of the market in order to try to get the inflation numbers down. We have crazy energy prices. We have a geopolitical crisis in Europe with Ukraine. And so this is just not a crypto problem. The next couple years, especially 2023, you feel very confident we're going to have less liquidity in here. A lot of people are calling for a recession next year. So I just think that is the state of play right now. And it's kind of mean to pick on crypto in particular inside of that broader market context. It's it's not just our industry, it's literally everybody. And that's just how it's going to be next year. So that happens. We have these big macro cycles, and we're in one.
Totally. Well, thanks for coming on today. I appreciate your just unfiltered thoughts, off the cuff, talking about what's going on. I think for a lot of people, it's good to hear from someone who's seen it and just has experience in the industry. So I look to you as a founder for
yep. And
for
our heart,
just opinions on the matter.
Yeah, and our heart goes out to people on FTX. I don't want to sugarcoat it. This is Mt. Gox size, right? Industry impact wise, and Mt. Gox, I don't know if those people have gotten their money back from that. It's been a decade now. Japanese bankruptcy court's much worse, but you're talking like multi-year process. I would put 5+ years on there for you all, and that's what it is.
Yeah, and even the people who were affected by Voyager, I mean, they had gotten an agreement passed through court for FTX, so those people are all going back to the drawing board too. So just a lot of people who are looking for answers. So definitely thinking about them. Well, that's it for today's Crypto Weekly recap. A little less positive one than normal, but hope this helps, keeps you informed, and we'll be back next week with more crypto news. See ya.